Most people think Bitcoin doesn't matter at all. It doesn't matter in the big picture, and it doesn't matter to them personally. It's just magic internet money for nerds. But here's the thing, whether you like it or not, Bitcoin is coming for you. Governments, banks, legacy financial system are all trying to keep up with it and being forced to adapt to the existence of this new form of money. The question isn't whether Bitcoin will affect you, it's how soon. Why is Bitcoin creeping into everything, and what does it mean for you personally? In this video, I'm going to explain why dismissing Bitcoin or sticking your head in the sand and ignoring it is not just a benign choice. It's not a simple choice of, oh, I'm going to ignore that thing and it'll never affect me. On the contrary, Bitcoin is going to touch nearly everything in our lives. But if you choose to dismiss it or ignore it, there are real consequences for doing so. This video is not about fear-mongering. It's about understanding the realities of what's happening. Saifedean Ammous is the author of the Bitcoin Standard, and he once likened Bitcoin to financial gunpowder. What does that analogy mean? The background you need to understand is monetary history. Over time, humans have used different commodities or physical goods as money and as stores of value. Those goods compete against each other in the free market, and the better money wins. Better money means it best fits the properties of money, which are durability, portability, divisibility, fungibility, verifiability, and last but not least, scarcity. So if two goods compete in the market as money, the one that better fits those properties will win. History tells us this is a fact because humans will choose the better money over the others due to the fact that it's better at serving the purposes of money and storing their value into the future. If two different goods both fit the properties, the harder money will win. That means the one that's harder to produce more of, which means it's harder to dilute the existing stock. Gold is the best historical example because gold won this competition over other things for thousands of years because gold proved to be harder to create more of. Over time, gold built up the reputation of being sound money. After a long period of time, network effects take over, and then new humans are born into a world where gold is already considered sound money and a good store of value. So they don't question it, and gold's dominance continues. Back to the financial gunpowder analogy. The point of that analogy is to illustrate that if you think of one army as having gunpowder, adopting gunpowder as a new technology of warfare, another army has no choice of whether or not to adopt gunpowder. They must adopt gunpowder or they will lose in a competition of warfare and be taken over by the other society. So they have no choice. Money acts the same way. If one person or group adopts harder money, the other groups don't actually have a choice to continue using weaker money if they want to store their value into the future, because the harder money is going to devalue the weaker money over time. Yes, technically they could choose not to adopt the harder money, but then all the value they hold in the weaker money will go to zero over time. You either make the choice to switch or you hold the weaker money and see your purchasing power go to zero against the harder money. The same way you either make the choice to adopt gunpowder or you see your army and your society go to zero against another army that has gunpowder. There's a famous book called Only the Paranoid Survive, and boiled down very simply, the lesson is proactive adaptation leads to success. You can also think of that as the inverse. Refusal to innovate or adapt or adopt new technology leads to disaster. Again, looking at monetary history, this lesson is true of money. Refusal to adopt harder money leads to disaster. You can try to deny harder money, but holding weaker money will make your savings dwindle to zero in the long run. So Bitcoin is coming for you if you're holding weaker money. And this also goes beyond the holders of money. Bitcoin is coming for you if you're a financial advisor, if you're a money manager, if you're a capital allocator of any kind. Bitcoin is coming for you. I will explain that in just a second. First, if you're enjoying this video, please just hit the subscribe button. That tells the YouTube algorithm to push this out to more people so we can get more people understanding Bitcoin. So here's why Bitcoin is coming for you if you're any kind of money manager or financial advisor. Let's say, for example, that you manage a bond portfolio for your clients and you've chosen to ignore MicroStrategy, MSTR, convertible bonds over the last couple of years. Well, they've been the best performing bonds on the market, which means you've underperformed your peers who did buy them, which means your clients are going to flee to fund managers who are crushing your returns, and your business is going to die. Same thing is true for hedge funds or other investment managers. For 16 years, they've been ignoring the best performing asset in the world if they haven't been buying Bitcoin. Over the last year, they're finally starting to catch on because their returns have been getting destroyed by any fund or any normal idiot like me who's been holding Bitcoin. Anyone who's been holding Bitcoin has been destroying the returns of the best investment managers in the world. Normal dumb plebs just diamond handing Bitcoin, beating the best hedge fund managers in the world. And don't talk to me about the volatility, because it's also been proven that a portfolio holding Bitcoin offers better risk-adjusted returns despite the infamous price volatility. Small side note, if you want to understand why Bitcoin is in fact not volatile, but is one of the most stable things on earth, you can watch this video right here. This is true for financial advisors. Think about this. A CFA or traditional financial advisor, how long can they continue ignoring Bitcoin while they dramatically underperform another financial advisor who does understand Bitcoin? The inspiration for this part of the video is Rajat Soni, who's a CFA on X and on YouTube who talks a ton about Bitcoin. Think about this. His clients will continue to outperform any traditional financial advisor or any CFA competitor of his who ignores Bitcoin. Just as Bitcoin will suck up all the monetary premium from inferior stores of value, hedge funds or CFAs who adopt Bitcoin will suck up all the AUM and the clients from their peers who will consistently underperform them. And it's not just that they'll underperform. Their lack of foresight will doom their credibility and their trust. Think about this. If I trust you to manage my investments, and for years you've simply been ignoring Bitcoin or dismissing it or telling me not to think about it because it's a tulip bubble, but it's continued to be the best performing asset on the market, maybe I even came to you once or twice and I said, hey, I keep hearing about this Bitcoin thing. Should we be considering that? And you keep saying, no, it's a fad, it's a Ponzi scheme, it's a tulip bubble. And you keep being wrong year after year after year. And I keep watching my investments underperform. And I see massive opportunity costs of the gains I've missed out on, as you kept me in the 60-40 equity bond portfolio, or you kept me in the S&P, and you kept telling me to ignore and dismiss the best performing asset on the market in history, by the way. Eventually, I'm going to start thinking, damn, I could have retired 5, 10, 20 years earlier if I hadn't listened to this bozo who I have managing my money. Then I see a CFA like Rajat, who has a tremendous, deep understanding of Bitcoin, and he's clearly done the homework, and he has strong conviction, and he's been right about it for years. I'm going to think, okay, I need to move my money and go work with this guy because he actually knows what he's talking about, and he's not ignoring new asset classes that could benefit me. He's keeping an open mind. He's studying. He's smart enough to realize when a new thing comes along that's better. You know, a new thing that is the hardest money and the greatest savings technology ever known to man. He's not just like, oopsie, sorry I ignored that and I cost you 60% year over year compound growth. Instead, I had you in the S&P and the Mag 7, and I charged you 1% for that bland, conventional-ass wisdom that you could have gotten anywhere from any article on Yahoo Finance. My bad. How long before I come to you as my advisor and I say, you've cost me hundreds of thousands or millions of dollars, and your inability to understand a new asset class means I no longer trust you to understand the market or appropriately evaluate different investments, so I'm leaving you? The 60-40 portfolio is dead. It's been getting crushed for years due to the underperformance of bonds. And any portfolio with even a tiny allocation to Bitcoin has vastly outperformed. We're heading towards a world of neutral global reserve assets. As the old monetary order breaks down, gold was the neutral global reserve asset of the past, and digital gold is the neutral global reserve asset of the future. If you want to better understand that argument, by the way, you can watch this video right here. But again, any portfolio, even with a 1% allocation to Bitcoin, has outperformed a traditional 60-40 or a traditional S&P. So any financial advisor or CFA who's recommended Bitcoin has been right. So CFAs or advisors who want to keep their clients will be forced to recommend Bitcoin or see their business go to zero. The same way, a hedge fund manager will be forced to adopt Bitcoin or see their assets under management go to zero as they underperform their competitors who are adopting Bitcoin. Fixed income investors, bond managers, pension fund managers, it doesn't matter. All of them, if they have a competitor who adopts Bitcoin, who adopts MSTR or buys MSTR convertible bonds, and those investments outperform, when their clients see the returns of their competitors who've adopted Bitcoin, those assets are fleeing. And by the way, I haven't even mentioned gold or real estate, but this is true of those assets too. Bitcoin's not going to demonetize them overnight, and gold and real estate will continue to go up in fiat denominated terms. But in terms of Bitcoin, those assets are already heading to zero. So just make sure you understand the consequences of not understanding or studying Bitcoin, because it's not as simple as I can just ignore this thing and it won't affect me. Just like the army, who has no choice whether or not to adopt gunpowder, you, in the long run, have no choice whether or not to adopt Bitcoin. If you stick your head in the sand, you will see the value of your savings go to zero against Bitcoin. And there's plenty of Bitcoin critics out there who, if you follow their advice, you're in big trouble because they keep embarrassing themselves. And if you want to see me dismantle a few of them piece by piece, start with this playlist right here. Because as always, never forget, Bitcoin's inevitable.